Hey folks, David Frost, LazyGapTrader.com. I trade gaps. I teach other traders how to trade gaps. The reason I do this is because gap trading is the single most profitable and best day trading strategy available in the markets. As most of you know, I have a course where I teach two specific gap trading strategies, the morning gaps and gap fill trades. In this video, we're going to talk about a couple of successful morning gap trades from today. And the second strategy is the gap fill strategy, where I teach traders how to identify stocks that are coming back to fill gaps left open from a prior day. So in addition to the course, I also have a service where I send out my gap trades each and every morning at 9 a.m. Eastern Standard Time, about 30 minutes before the market opens, with my gap trades, what I've identified as the highest probability trades for the day. This service I offer on a 2-week free trial. After the trial, it's $77 a month. It's worth its weight in gold. What I'm going to do is let me show you the email that went out this morning to traders before the market opened 9 a.m. So we had 3 possible gap trades today: Alibaba, Under Armour, and Michael Kors. Guess what? It was a good day. 2 out of 3 hit their levels, and 2 out of 3 were winners. Alibaba was a winner, Under Armour was a winner, and Michael Kors, which was a gap higher, never hit its level. Therefore, it becomes a no trade, no harm, no foul. It just never happened. So both Alibaba and Under Armour were stocks that were gapping down at the open, which means I'm looking for a support level where those stocks are likely to find support and react or trade in the other direction. And if we can find the specific and precise level where that stock will find support and trade in the other direction, that's a situation where we can make money, we can profit from, and I can teach you how to do this each and every day. That's what I teach in my course. So real quick, on Alibaba, we're saying gap lower, and the support level I gave 2, but the one that hit was 78.08. We'll talk about that one in a minute. Under Armour, same thing, gap lower, support level 35.69. Let's go ahead and take a look at what happened with those stocks today. So here's a 5-minute chart of Alibaba. You can see my trend line running across the screen at $78.08. Yesterday, up at the top of the chart, stock closed up at about $82 a share. This morning, the stock opened down here. The opening price was $79.15. So roughly a little less than $3 on the downside, about a $3 drawdown at the open. So with that, I identified a level of 78.08 where I thought it was the highest probability area that we were able to find a bounce or support level where the stock would trade in the other direction. So what happened as the day went on? Finally, the stock came in to $78.08, pierced through it. I think it came down to making a low of $77.92. So we're out of the money by 16 cents, no sweat. And then less than a half an hour later, the stock is up at a high of $78.60. That's a nice quick scalp trade for a 52-cent gainer. Pretty stress-free situation, pretty stress-free trade. And that's what we try and provide. If I can teach you how to identify the highest probability area where a stock is likely to find support and trade in the other direction, and you can do it over and over and over again, that's a recipe to compound profits and make money in this market. All right, so let's take a look at the next stock that hit its level today, Under Armour. So here, this was a quick trade. So we're looking at a 1-minute chart on Under Armour, and you can see here, this is where the stock closed yesterday. Here's the gap down. Here's the opening today. So 6 minutes into the trading day, the stock hits its level, 35.69, represented by the trend line running across the screen. 2 or 3 minutes later, the stock is up at $36.05 right up here. And that represents a gain of about 35 cents in just 2 to 3 minutes. That's why it was a quick scalp trade, but that's all we were looking for. Sometimes we're looking for more. Sometimes we're able to get more, and that's one of the modules in my video-based course that I teach, and how to turn trades into risk-free, emotionless trades. And sometimes we get a runner where we catch $2, $3, $4 out of a trade. And sometimes we're looking for a quick scalp trade. And all these are items that are discussed and taught thoroughly throughout my course. But today on Under Armour, even in the email, and we can go back to that and take a look, you can see here I say stop and profit target is about 30 to 35 cents. And that's exactly the level of the bounce that occurred in Under Armour from that reactionary support level that I specified a half an hour before the market opened. How do you do that? I can teach you how to do that. I teach you how to find those levels. I teach you how much a stock should bounce. I teach you where the stop loss order should be. I teach you everything you need to know in order to be successful with gap trading. This is why you need to come over, check out lazygaptrader.com, see what we have to offer. It's a situation where I can teach you how to do this for yourself, where you can profit for the rest of your life. I'm David Frost, lazygaptrader.com. Come check it out, folks. Thanks for tuning in.